There's no doubt that the markets would experience some volatility in the near term because we are in a calibration phase about how we understand the disease and how we figure out the effective response to that disease. And therefore, as long as we have a degree of uncertainty regarding these two topics, there will be always a pandemic risk that markets need to cope with. And we simply assume that the bulk of the repricing has occurred because we think the markets were basically taking the view that before the weekend, last weekend, again, this is a very fast evolving situation. Before last weekend, they were taking the side of maybe this being contained in Asia. Now, obviously, with the Italian cases and a very significant spike in other areas, no longer the market can no longer take that for granted. So we assume that in the near term there will be some volatilities, and geographically speaking, it's possible that this volatility start moving away from Asia to the other regions. So we'll have to cope with this at least for a while.
Yeah, absolutely. The VIX up a whopping 46% overnight. But in terms of what this means for China and its growth, we've had Goldman Sachs come out today and cut its GDP expectations for China in the first quarter, now expecting growth year on year of just 2.5%. What would that mean to the global economy?
Well, again, it's a very fast-evolving situation. When we first encountered this risk in late January, we were thinking, okay, we could maybe accept, we could potentially get a contraction compared to the previous quarter. But obviously, the high-frequency data that everyone has been observing so far in terms of coal consumption and the traffic and the other activities, it's possible that there's significant downside risks. We might have to reassess our existing forecast of 3.8% for year on year in the first quarter. So there's definitely a significant downside risk. But then we also have to remember that yes.
No, Homin, I'm sorry, just to break in there. It's Hadley out in Abu Dhabi. I just wanted to kind of ask you to give us your take on where this leaves the United States right now, because I just came off the back of a G20 ministers meeting. Finance ministers, central bank governors, Jerome Powell was there, the Treasury Secretary, Steven Mnuchin as well. They were essentially saying we've still got to do this wait and see approach. But this is an incredibly fast moving story, and I think you saw that reflected in what happened in Wall Street action overnight. What's your take on where this leaves the United States in terms of Fed policy?
Well, the Fed will probably have to cut. Our expectation is for 2 additional cuts before the end of the year, starting in June, and likely another one, depending on the macroeconomic developments, either in September or December. So that's our baseline case for the year. Obviously, if you look at the market indicators of inflation expectation, they have fallen quite a bit since the start of the year. So in our opinion, the likelihood of a rate cut in June is quite substantial.